Chainlink was one of the best performing assets during the last crypto bull run, going up a staggering 10,886%. However, during the crypto bear market, Link fell over 90%. So the question is, will Link return to its old highs? And what is the upside potential currently of the Link token? My conclusion after doing my own research, listening to hours of podcasts, and interviewing two of the most prominent Chainlink community members is that Chainlink is primed for potentially a massive move up. Much more than I actually expected personally when I started looking into it. I was thinking with it being a larger project already that it just didn't have that much upside potential, but that might not be the case. In this video, I'm gonna be diving into Chainlink, what they call CCIP, and their goal to move literally quadrillions of dollars worth of value across Chainlink, and why they might be primed to benefit massively from Tradfi bringing real-world assets on-chain. It's pretty insane what they're building, and if they succeed, will have massive implications for all of crypto, as it has the potential to bring literally tens of trillions of dollars on-chain. Real quick though, I have 3 goals this cycle. My base goal is to make 1,000% gain for my overall portfolio in 2024. My mid goal is to make a 5,000% gain for my overall portfolio in 2024, and my upper stretch goal is to make a 10,000% gain for my overall portfolio in 2024. Last cycle, I was able to do around 4,000%, and currently my portfolio is up around 207% so far, having invested every cent I had besides the equity in my house back in late 2022 after the collapse of FTX. All right, diving into Chainlink. Chainlink was mostly known as a price feed oracle during the last bull run. However, what most people miss is that although that's how Chainlink did start out, they've actually grown into something much bigger since then. Here's how ChainLinkGod, one of the most prominent figures in the Chainlink community, describes it.
You know, saying Chainlink is just price feeds, to me, is kind of like saying Amazon is just a bookstore. Like Amazon was when it first started a bookstore, and they still sell books on the marketplace, but like that's obviously not the only thing they do. Now they do cloud computing. They have a whole marketplace of products that they allow vendors to come in and sell. Like it's this whole platform thesis. And so when you look at Chainlink, like Chainlink is fundamentally this platform for external services connecting smart contracts to every resource that they need. So you can kind of bucket this into external data. So that could be market data, or that could be weather data, that could be GPS location data, external payments, any kind of data that a smart contract needs, but a blockchain doesn't provide it. Chainlink and its decentralized Oracle networks is what provides that data. But data is like one component. You know, blockchains are really, can be expensive, they can be slow, and they don't have privacy. So you can use the Chainlink platform to do off-chain computation. So you can run these computations off-chain for really cheap, and then you could just verify the outputs on-chain, which allows you to massively scale like the throughput of smart contracts, because you do most of the heavy work off-chain, and then you just verify on-chain. It's much more scalable. And the third bucket, which I think more and more people are starting to understand with CCIP, is cross-chain interoperability, where blockchains, because they can't connect to external systems, that means they can't actually even connect to other blockchains. So you have all these like isolated islands, fragmented liquidity. It's like these digital islands that can't connect. So Chainlink CCIP, or the cross-chain interoperability protocol, is this secure, decentralized standard for connecting all of these public blockchains together, as well as connecting all of the private bank blockchains together, and then eventually bridging these two worlds together. So you eventually connect all the blockchains so people can move their tokens between any different environment. You can trade across blockchains. If you're on one blockchain, you can interact with smart contract applications on other blockchains without even touching or knowing that that other blockchain exists. So like fundamentally, at the end of the day, Chainlink is this platform where people can build these services and connect all the external data resources, all the computation, and all the other blockchains and interoperability that's required for a secure smart contract application.
Now, this reminds me a lot of early networks back before the invention of the internet. Back then, networks were siloed off and couldn't communicate with each other. Instead, companies would have these things called intranets, which were like internal networks where within that network, computers could talk to each other, but outside that network, nothing could communicate in. Then, with the invention of something called TCP, different networks could actually communicate with each other. And that was actually the birth of the internet. TCP enabled the birth of the internet because you could have all these different networks all over the world that could finally communicate and talk with each other. In the same way, Chainlink's CCIP allows public blockchains to communicate with each other, so like Ethereum and Solana, but it also allows private blockchains to communicate with each other. It also allows public blockchains to communicate with private blockchains, to communicate with private ledgers, and all kinds of crazy things like that. Now, to be honest, there's just a lot to unpack with Chainlink. They do a lot of different things, and there's not really enough time in this video to unpack every single thing that Chainlink does. So I'm gonna stick with primarily the most bullish things I've learned about Chainlink and what gets me most excited about it. But really quick, before getting to that, so that Chainlink makes maybe a little bit more sense, I wanna speed run through one important detail. Chainlink isn't a blockchain itself, and it's not even a single network. Instead, Chainlink is made up of thousands of tiny networks run by independent operators. Here's Fishy explaining how it works.
Chainlink is actually a protocol that builds networks. Okay, so it's not a network itself, it's actually a protocol that builds networks. So this protocol that builds network has actually been used to build over 1,000 Chainlink networks. So that's another thing that blows people's minds that they don't understand, is that Chainlink is not one single network. So like, no, we have one Bitcoin network, we have one official canonical Ethereum network, one Solana network. There's not one official Chainlink network. There's over 1,000 Chainlink networks, and each one of them is compiled to do one specific task on behalf of whatever blockchain it's servicing or whichever particular service it's offering.
Okay, so by far the most bullish thing that I learned about Chainlink during my research was the bridges that they've built into the TradFi space and the insane use cases that Chainlink unlocks within that space. Like I said, they envision not trillions, not hundreds of trillions, but quadrillions of dollars of value transacting across the Chainlink networks. And that quadrillion number doesn't come from ChainLinkGod, that doesn't come from Fishy, but that actually comes from Sergey, the founder of Chainlink. He says that he envisions quadrillions of dollars of value transacting across the Chainlink network. And that might sound like it's a massively exaggerated number, but I promise you, they actually have some solid reasoning for why they believe it has that potential that are well thought out and not just some wild speculation. But before we get to that, really quick, I just opened back up the Obsidian Council after closing it last year, and I'm only opening it to the first 200 new signups. If you don't know, the Obsidian Council is my private community where I share monthly research, including my entire portfolio and updates on when I buy new projects. We've had projects like Akash, which is up 792% since sharing it, Rune, which is up 232% since sharing it, K&K, which is up 745% since sharing it, Wi-Fi, which is up 1,000% since sharing it, and Lake, which is up 652% since sharing it, as well as just a ton of others. We also have the Airdrop guide, which some members made over $26,000 last year from airdrops alone, covering their entire membership for literally decades. Plus there's courses, resources, and just a ton of other tools to help you on your crypto investing journey. There's a link in the description if you want to sign up, and again, I'll be closing the group back down once we hit the 200 member cap. Okay, back to it. Banks and traditional financial institutions have literally hundreds of trillions of dollars of assets. And a huge swath of these assets are actually outside of the traditional investing space, aka like you can't buy them on the stock market or different things like that. Meaning the average investor has no way to access these assets, and these institutions can't easily package these assets to push them to the masses. Here's how Fishy sums it up.
Banks have hundreds of trillions of dollars worth of assets, that are sort of largely outside of our kind of digital financial system. And so what I mean by that is that these are assets that you cannot easily just open up your Robinhood app and quickly buy a share of. So like you can, fire up Robinhood or fire some other kind of like digital brokerage app and very easily buy a share of Apple or a share of Tesla, right? But there's these other markets that have a lot more steps, friction, restrictions, lack of liquidity, such as, let's say, pre-IPO stock, carbon credit assets, private credit markets, commercial real estate. There's several $100 trillion worth of value, and these assets either are sold OTC or they're sold in these kind of private markets that require lots of additional kind of due diligence. They're not as liquid. It's hard to find buyers and sellers if you're trying to sort of raise liquidity for these assets. And so what the value prop of these banks are, hey, if we can tokenize these assets, and then we can basically bring a lot more transparency, liquidity, reduce friction, easier to find counterparties, much easier. We can like remove some middlemen, but basically just create all around higher utility and increase the efficiency for these markets. And if we can basically tokenize them, then we can completely reshape how these markets operate.
Chainlink aims to connect literally all of these assets that all of these traditional institutions hold on their private ledgers together by allowing them to tokenize these assets and bring all of these assets on chain. And keep in mind, the entire crypto market is just over $1 trillion. And these institutions hold literally hundreds of trillions of dollars of assets. Right now, these private ledgers can't communicate with each other. So these assets are actually really difficult to buy and sell. In some cases, they literally have to pick up the phone and call people and arrange deals over the phone in order to move these assets. But tokenizing them would make them as easy to buy and sell as essentially any other crypto token. And they want to tokenize these assets. Larry Fink, the CEO of BlackRock, says that tokenization is the next generation for the markets. The next piece I really wanted to understand was why these institutions want to tokenize these assets. I've heard Larry Fink say it over and over again that, that tokenization is the future. And I understood like some of the things about why they want to tokenize these assets, but I just kind of wanted to know more about it. Here's how Fishy responded.
I mean, the simple answer is banks like making money, and the reason they want this is a profit motive. Is that by tokenizing all these assets, it's very easy to sort of have the kind of next generation of securitization, right? So what banks want to basically do is be able to create products around all these tokenized assets and be able to sell them to pension funds, to sovereign wealth funds, other types of large institutional investors. If you can tokenize these assets, then it's and basically create reduce risk, increase transparency, reduce some fees, increase liquidity, just all these kind of all around general efficiencies around these things. Then the banks can sort of generate lots of income and fees for themselves. So it's not some kind of like a ambiguous kind of like effective altruism type motive, like, oh, the banks are doing this just because they want to feel good or they care about decentralization. No, it's simply the fact that this will bring a lot of efficiency, liquidity, and basically increased volume and increased activity for these asset classes. And increased volume means more money for the banks. So it's a very clear answer as to why they want to do this, is that they will make more money off of doing this.
That made a lot of sense to me. The one thing that you can always bet on when it comes to Wall Street is that they're going to be greedy. They will always do what's in their own best interest. And if they have a way to make more money, if they have a way to wrap something up as a product and sell it to the masses, they're going to do that because that's a new income stream for them. Next, I wanted to know though how far along Chainlink actually was in forging these partnerships. Like, I know that the Tradfi space moves really slowly and they're really cautious to do anything new. So it's really important like how real these partnerships actually are. And I learned that Chainlink has already forged some partnerships with some of the most powerful financial entities on the face of the planet, including things like Swift and the DTCC, which the DTCC is responsible for the processing of literally $2.4 quadrillion a year by themselves. Here's ChainLinkGod talking about the partnerships that Chainlink has built.
Other projects may have a narrative like Ripple or something that they work with institutions, but they haven't actually done anything for years to make that a reality. While Chainlink comes in and it's actually working with the largest financial institutions in the world and making this a reality. So I think a lot of people, a year ago, if I said Chainlink was at the center of the tokenized real world asset narrative, people wouldn't have believed it because they didn't like price feeds. What does that have to do with tokenized assets? But now with CCIP and this cross-chain interoperability, I think it's starting to click for people. And with these partnerships with Swift and these other institutions, that Chainlink is actually the protocol and the platform that is making this a reality, no longer a narrative. And things are like rapidly shifting from these just initial proof of concepts and testing, and they're moving towards production. Like a lot of institutions are moving that way. You can kind of see a version of that with like Bitcoin spot ETFs. Like institutions care about that in that regard, but that's like pure crypto exposure. That's different than using blockchains as a settlement layer for all the assets in the world. And that's fundamentally what Chainlink's focused on facilitating and actually bringing into reality.
After all this, everything kind of started to come into picture for me. Originally, I was picturing Chainlink as literally just simply a price feed oracle. And I was learning that not only was Chainlink not a price feed oracle, and not only did price feed oracles not work the way that I thought they worked, but Chainlink had grown into this like whole suite of different products that kind of all revolved around interoperability or connecting different things together, connecting different blockchains together, connecting different ledgers together, connecting blockchains to real world like information. They had built this entire suite of products that revolved around that concept as a whole. And this ability to connect these things allows for the unlocking and tokenization tokenization of hundreds of trillions of dollars of assets. ChainLinkGod actually made a really interesting point that not only does it allow for that, but it actually allows for things that we can't even anticipate today. Here's what he said.
And one thing I would add is like when people project like the size of the tokenized asset marketplace or what it could be in the future, they usually look at like, here's an existing market, here's the bond market. If we bring 10% on chain by 2030, it'll be this market opportunity will be massive. But I think one thing that's kind of people don't see is that tokenization is like a fundamentally new way to create a financial product itself. It brings massive efficiency gains. It's much cheaper to settle and much faster to move around. It's much more capital efficient. And there's certain types of financial products that may only be possible because of tokenization itself. So what new asset classes are going to be created as a result of tokenization? What new energy markets that are connected directly to the energy production IoT sensors, and you can directly tokenize that asset and bring along the cash flows with it into the market? Like, what's the market opportunity of all of these new categories of assets that could be brought into existence only because of tokenization? So like the scope of possibility is not just bringing the entire financial system on chain, it's growing the financial existing financial system orders of magnitude larger, because not only can you create new assets, you can actually create a global economy where assets can move from one nation to another frictionlessly and cross-border without all the frictions and delays. Like in many regions and many countries, they don't have a very stable legal system. So a lot of companies just can't operate there. A lot of financial institutions can't interact with those countries because they have no system to fall back on if something goes wrong with an agreement. But if they can fall back on a blockchain with smart contracts where all the conditions of the agreement is written in code, is automatically executed, nobody can screw you over, that's basically not a replacement for the legal system, but it's an alternative fallback mechanism. So you can actually operate in those nations and basically bring billions more people into the financial system itself and bring capital in and basically raise those people up so they can actually interact with the global economy itself.
So you can see how I came to the conclusion that Chainlink could be primed for potentially some massive growth over this next cycle because of all these things and inroads that they built. Now, of course, you might be wondering like, okay, so say all this stuff is successful, say they do connect Tradfi and all these different ledgers, etc. How does that directly reflect into the price of Link? Like, how is the asset Link fit into this situation? Well, first off, you can assume just from like pure speculation, the asset Link's going to go up. Like, even if there's literally no use case connecting Link to any of these like revenue streams, etc., the asset Link will appreciate due to speculation. We've just seen that so many different times within the crypto space. That's just how things seem to work. Like, the speculators come in and they say, hey, eventually some way this asset's going to benefit by being associated with this, and it's going to continue to go up. Or maybe they're thinking that people are going to buy it because they don't understand that it's not I don't know. For whatever reason, just on speculation alone, I would anticipate that the asset's value would go up. However, on top of that, there's actually some solid fundamental drivers that mean that, you know, as the success of the Chainlink network increases, the price of the Link token should also increase as well. The first is that all payments done on the Link network are done in the Link token. So the more activity that's happening on the Link network, the more of these different like little networks that are being built out to handle all these things, the more the Link token has to be bought and spent on the network. And this all gets abstracted away for like the TradFi people. So like from my understanding, they're building it in a way that like if the TradFi people, you know, don't know how to buy Link and hold that, they can use dollars, they pay on the network, and that gets converted to Link on the back end, and they don't have to worry about it. So overall, that means that if all these financial institutions want to pay for these services, they want to unlock all this liquidity, and they want to be able to sell these products, they're going to have to be buying and paying Link. And again, it gets abstracted away. They're not having to actually go buy Link themselves, but on the back end, it's still buying Link, and they're still having to pay Link. So that's a lot of Link being bought by on the open market. The second way that Link benefits is via network fees. The more the network is used, the more fees that are paid out, and the more reward that goes to stakers. And as the APY for staking Link goes higher and higher, that's going to attract more people who want to stake Link, because if you know you could buy Link and it's say something ridiculous, like it's paying you 100% APY to stake it, like everyone would want to be doing that. Like everyone would want to go buy Link and stake it, and that would push down obviously the more people that are staking it, it's going to push down the APY. But my point is that as there's more fees going to those validators, the stakers, that's going to attract more people to buy and stake Link. The third way that the Link token benefits from this is actually the most interesting to me, and that's that the more value a node operator is securing, the more collateral and link they're going to want to hold. Basically, imagine if you're like securing, tens of trillions of dollars for the TradFi space, for one of their products or whatever. I don't know how. They got a private blockchain. They're transacting with another private blockchain in another country. There's tens of trillions of dollars that are getting verified across the Chainlink network. How secure would those TradFi institutions want that network to be? They're going to want the most security physically possible. That's a lot of money to be transacting across. And so they're going to want to have assurances that the network operators that they're picking are the most secure that they could possibly have. Imagine, for example, you have two different network operators and you're trying to choose which one you're going to pick. One of them has $10,000 worth of staked link that if they do something bad, that gets slashed. The other one has $1 billion worth of staked link that if they do something bad, they're going to get slashed. Which one are you more likely to trust to do the right thing between the one that has 10,000 and the one that has $1 billion? Obviously, the one that has $1 billion. And the more money that you're moving across the Chainlink network, if that person is responsible for securing $1 trillion, you're going to want that collateral to be higher and higher. So if they're securing $1 trillion, maybe you want them to have $1 billion or $100 billion worth of collateral, 10 billion. I don't know what it'll be. But I'd imagine the more collateral they have, the more they're likely to trust that operator. And so a lot of these operators will probably compete on the amount of collateral they have staked to allow them to say, hey, look, I'm the most secure. You can trust me the most because if I do something wrong, I have the highest chance. I have the most to lose, basically. So big picture, imagine hundreds of trillions of dollars or quadrillions of dollars worth of value being secured by the Chainlink network. These operators are going to need a lot to buy a lot of link to stake as collateral, especially considering how lucrative and big the fees could potentially be with that amount of money transacting across the network. Like, they're going to want to be the one securing it. They're going to be making tons of money from these fees. And so they're going to want to own a lot of link and stake it as collateral. That's the third way the Link token directly benefits from the growth of the Chainlink network. Okay, to summarize, so the Chainlink token does directly benefit from the growth of the Chainlink network. There's this massive potential with all these TradFi relationships and like unlocking all of these hundreds of trillions of dollars worth of value that are currently kind of stuck in all these private ledgers. And, overall, I'm really excited and bullish about the Chainlink token. From here, I wanted to ask ChainLinkGod to really quickly summarize kind of like what's next for Chainlink and what he's most excited about on like the short term. Here's what he said.
Yeah, so you can kind of think of Chainlink as making three major bets right now across data, compute, and cross-chain. So in the data component, Chainlink launched data streams, which is a really low latency, sub-second update speed price oracle network. And that's really important for derivatives, perpetual futures. Those are taking off on-chain on networks like Arbitrum, on networks like Solana and Avalanche. That it seems likely that the vast majority of derivatives trading is going to be taking place on-chain. And Chainlink data streams is like the evolution of Chainlink price feeds, the same decentralization, the same data quality, the same security guarantees, but extremely low latency, very price sensitive data, which is needed by protocols like GMX, who's already paying 1.2% of the fees that they generate into the Chainlink network. So users are already paying for this today. That's like the data component, how price feeds will evolve. The compute play is what Fishy mentioned in terms of Chainlink Functions, which is this decentralized pre-built network where any developer can come to Functions and define exactly what data sources they need, what kind of computations that they need to run over it, like machine learning or any kind of computation, and put that on chain. It's this very trust minimized, very secure, decentralized ability to get any data or any computation that's executed off-chain onto the blockchain. And so that's a very powerful compute component to complement what blockchains do. Then the third, which we've kind of been talking about, is CCIP. And that has like the DeFi tract in terms of connecting all the DeFi applications together, as well as like the private bank blockchain ecosystem, which I don't see that slowing down anytime soon. And I think as things move more and more from proof of concept to pilot into production, it'll be very obvious that institutions want the security guarantees that CCIP provides them and is already used across these two different worlds, so they can easily connect those two. And the power that Chainlink is a platform is that you can actually combine multiple services together. So something like data streams, this low latency Oracle solution, that's combined with a transaction automation service that Chainlink has. So you can settle these derivatives trades extremely quickly without front-running concerns because you're using multiple services. You're using the data component of Chainlink and you're using the automation, which is like a compute type solution of Chainlink together. And then as a DeFi protocol, if you're already using data streams, you're already trusting the Chainlink network. So expanding your usage of Chainlink to also do cross-chain with CCIP, like you're not adding any additional trust assumptions. You're just trusting the same network to do more tasks for you. So Chainlink has over 2,000 projects in its ecosystem that are using various different services. And so as Chainlink plays out these 3 bets and potentially launches more services in the future, each of these applications, which are already using one of them, it's very likely, or it makes sense for them to also start using the other Chainlink services and pay more fees into the network for using those services together. So I think it'll be interesting to see these 3 bets scale out over time and start seeing these TradFi integrations scale up into production type applications to show that there is trillions of dollars in assets that can be brought on chain, and that they're using Chainlink to do that. So I'm very excited about the TradFi tokenized asset. I think it's been kind of a narrative over the past year, RWAs, but it's not just a narrative. Like, I think this is the way crypto is shifting. Trillions will be brought on chain, initially on private chains, and then eventually also to public chains. We see stablecoins scaling up, and they use Chainlink services for proof reserves. So it'll be really interesting to see how RWAs scale from a few $1 billion tokenized on chain to a few $1 trillion tokenized on chain, and then the volumes itself associated with that scaling up as well, all centered around using Chainlink, no matter what blockchain people are using. I think eventually people will become less tribalistic about like, this blockchain's better, that blockchain's better. I don't think users care. They want a blockchain network that works and provides the liquidity, the user experience that they want, all the technical complexity abstracted away. And that's exactly what Chainlink's doing with CCIP. I think that's the way things are going to trend. And, it's still early. Web3 UX is not the best right now, but something like CCIP will abstract away all those chain complexities. So you don't even have to think of what blockchain you're using, or even know that you're using a blockchain in the first place. Like, that's like the end thesis of what Web3 will ultimately look like, in my opinion.
So based on all of that, let's make some price predictions for potentially how high the Link token can go. Currently, the market cap for Link is around $7.9 billion, which is pretty high, with a fully diluted value of around $14 billion. And currently, the way that I would approach Chainlink would be as a growth play. So I'm looking at what Chainlink could become in the future. And my base case would be that Chainlink goes to around $40 billion this cycle, meaning around a 5x from here, which isn't super exciting. That's like kind of in line with Bitcoin and ETH. My bull case for Link would be that we see Chainlink announce some serious partnerships with CCIP in the traditional TradFi space. In this case, I could see Chainlink potentially hitting a $200 billion market cap. XRP hit $120 billion at their peak, and they have this whole narrative about like working with the institutions. So 200 billion seems reasonable if we see some of these major partnerships actually materialize. My ultra bullish case would be that not only do we see like some serious TradFi partnerships, but we see some serious TradFi interest because of these partnerships. So TradFi starts to take note of Link and say, hey, like, they're building this crazy network. We want a piece of that, because if we're going to have trillions of dollars of value flowing across this network, we want to own a piece of that network. And we can, because we can go buy the Link token, and that gives us governance rights over this network. And this isn't as ridiculous as it sounds, because Swift kind of operates, Swift, the banking institution, kind of operates almost like a DAO. So they're kind of used to something like this in the traditional space. So for them, it would actually make a lot of sense to be like, oh, let's go buy all these Chainlink tokens. We have governance rights, and then we kind of own a piece of this network that we're using. So I don't think in this scenario that it would be too insane to say that, like, in our ultra bullish scenario, when these institutions have trillions and trillions of dollars, that potentially Link could go to a $1 trillion valuation. Again, this is the ultra bullish scenario. This is my base case. This isn't my mid case. Ultra bullish. Institutions have trillions of dollars, and they want to own a piece of this network, all these partnerships, everything, all this demand. Maybe Link goes to $1 trillion. That's my ultra bullet. I know I'm gonna get some hate for that, because that's just such a high number. Even for me, I'm like, that's crazy. $1 trillion, that's crazy. But at the same time, like, that is what I'm gonna say. So that would be a 126x from here. So that is some serious upside if that were to materialize. Again, wild, crazy. I know that's why it's my ultra bullish case, but I do actually think that there's a path where that could happen. Now, the bear case for Chainlink is a couple things. For one, despite Chainlink building all these bridges into the traditional space, these partnerships could just never materialize. Maybe like they do the proof of concepts and they're like, oh, it's cool. But like, I don't know, traditional banking's slow to change. They're slow to move. Maybe they actually never act on these partnerships and nothing ever materializes. Secondly, you could have like regulation issues like that kind of block this from ever happening. Third, somebody could end up beating them to it. And I don't think maybe like a single project would do it, but maybe it's like this problem gets solved a different way through like 1,000 other like more obscure, smaller solutions, right? Like one person kind of fixes this, another project sort of fixes that, and then like slowly those stack up until they have like a full-fledged solution to like fix this problem. That is a potential outcome that could hinder Chainlink's growth. My personal take is, I don't know. I can't predict the future, but I do know Chainlink does seem to have some potential, and it is really interesting what they're doing. They're a well-established project. They have proven themselves in the past, and who knows? maybe my ultra bullish scenario happens. That'd be wild. If you want to learn more about Chainlink and what they're building, like I did not cover even close to as much as we talked about in the podcast. You can watch the entire podcast or listen to it on Spotify, Apple, or whatever. It's on I have a second YouTube channel where you can watch it. You can go listen to it on, whatever platform you listen to podcasts on. There's a link in the description of this video if you want to go check it out and listen to that. I also have other episodes on other things I release all the time, and not every one of them gets turned into a video on this channel. So if you're interested in hearing some of the things coming out, which I have some really good podcasts coming out with some really good guests, that's something you're going to want to check out, subscribe to. And if you want to be like super nice, you can give me a 5-star rating. That would be helpful. And another reason you might really want to listen to that podcast is ChainLinkGod gives his 2024 predictions for the crypto market in that podcast episode kind of towards the end. So it is worth listening to. It's really, really good. As always, none of this is investment advice. None of this is me telling you to go do these things. You should always do your own research, and just blindly copying YouTubers as like the way you invest is just a really stupid way to invest. If this video is helpful, make sure to hit that like button. If you have anything you want to add as far as Chainlink or any other interesting projects you're looking at, let me know in the comments below. And if you want to see more videos like this, make sure to hit that subscribe button and the little bell next to it to be notified each time I release a video. Thanks for watching, and I'll see you next week.